Hi everybody, Drew here and welcome back to another video. And today I just wanted to talk briefly on the JP Morgan Equity Premium Income ETF. This ETF actually looks very intriguing if you're looking for high amounts of cash flow against your portfolio. What I'm going to talk about in this video is not only the fact that you're going to get monthly dividends, consistent, they are variable, and I'll show you the dividend amounts here in just a minute. As you can see, we're over here. The JEPI ETF has all the most recent dividends. As you'll see, they are listed every single month, the record date, payment day. So we'll get into that in just a minute, but I did want to go over, another strategy you could potentially use against this with covered calls to supercharge your passive income and still get the dividend no matter what. So let's get into this. The first thing is that when you look at the performance history of this ETF, it came out in 2020, started at $50 per share. Now, something to keep in mind with this ETF is that it has not really done much in terms of the share price, but it's still up over the last 5 years, 12%. Can't complain there, 13%. Now, over the last year, with the market being down the way it has been, it peaked off at about $61.67, and then they have $56.57 as the price right now. Year to date is down 10%, but this is less than the market itself. When you look at the major indexes, they're actually down more. Like the NASDAQ, for example, got hammered down there at the lows. And this one was down a good amount more. You look down at like $52 per share, but it's bounced back some. So this strategy and what they're doing, basically, they have a diversified portfolio of equities and stocks and across a lot of different sectors. And then they also have exchange traded notes, 20%. That pay regular cash flow. So it's going to limit the upside on this, and you have to keep that in mind going forward in terms of where the share price could go. I mean, right now the share price, it still has not touched the lows when it came to the market at $50 per share, but it's just something to consider. The appreciation in an asset like this, it's all about income. It's not really about the share price. Just keep that in mind. Looking at the dividends, though, this is where it gets really interesting. So when you're talking about cash flow, and a lot of people are hunting for yield these days because there's a lot of assets, like even with interest rates going up, you have money market funds. For example, at TD Ameritrade, we pay hardly anything in interest to our clients who are holding cash. And the truth is, it's just one of those things that when you're looking for passive income and cash flow against your portfolio, an ETF like JEPI, I mean, we can run the number on the most recent dividend of 49 cents. Let me get my calculator out and I'll show you how much that is right now. I mean, assuming you were to buy some shares, let's say you had $1 million. I know it sounds crazy to put $1 million into one ETF, maybe, but nonetheless, let's just say you're like looking for retirement passive income. At the current price, you could currently buy 56 right now. So we'll just assume $56.57. I don't know. Just 1 cent above. Let's say the ask is 1 cent above there. So we have 17,677 shares. We multiply that by the most recent dividend. As you'll see, it is variable, but there's some consistency. And when you look back, it looks like, down here they're paying 20 to 30 cents. Recently, they've been paying more, 40, 50, 60 cents. And I think that's due to all the volatility we've seen in the market. So you're getting more premium as there's more volatility, because the greater the volatility in these stocks, the more the options premiums go up. And so they're able to get more cash flow from that. Now, what's interesting with an ETF like this is not only are you getting the exchange traded note income, the passive income and stuff like that, but you can sell calls against it, as I mentioned. And I'll get into that in just a minute, but let me go ahead and run the numbers here. So 0.495 dividend as of last month. We can actually calculate exactly how much that is per month. And right there, you're looking at $8,750 if you just assume it's going to pay roughly 40 to 60 cents going forward. Perhaps we get some raises, and maybe it declines too as the volatility dies down. Over time, though, I mean, with inflation and everything, it should continue to go up, but nonetheless, it's not really about the share price either. It's just more about the passive income, like I said, because that's primarily going to be your rate of return. But that's still fantastic. On $1 million, I mean, a lot of people are looking at 2 to 3% yields. This one pays a very solid yield. Times 12 is $105,000 in passive income. So that's roughly a 10.5% dividend yield on $1 million investment. Now, I want to show you next how you can potentially increase that yield. On TD Ameritrade's website right here, for example, I'm going to go ahead and put in an order. So I was able to buy, 16,000 shares, I think I said. I can run the numbers on that to make sure that's correct. But if we were going to buy, let's say 16,700 shares, I think that was the number, times If we run times 56, 57, we're probably going to get about $1 million. So almost about $1 million. We'll just say 17,000 shares. And we'll put in 170 contracts. So if you had roughly $1 million and you wanted to generate additional cash flow, look at the September expiration. So this is one example. If you already own these shares, you own, have $1 million in this ETF, you're already getting the $8,000 we just talked about in passive income. What you could potentially do on top of that here is sell a covered call. You'll see the bid price is 40 cents per share. So we could get filled, there's 37 contracts available, but we're going to try to get filled for 170 contracts. Not volume today or anything, so we'll see what happens there. But you can potentially, just theoretically looking at this, if you were to place this trade, 40 cents per share is the premium. That comes up to $6,800. And, you run the math on the share price once again. Let's just get a more accurate representation of how much money we're talking here. 17,000 shares times $56. And then it's moved up 57. Let's see here. So it's roughly just under $1 million, but you're getting $6,800 just for being willing to sell your shares at $57. So worst case, you're still going to get that dividend most likely because the person's not going to exercise the option. Typically, it's going to be auto-exercised. A lot of times, you're not going to see the option actually get exercised until expiration, even if it is above 57, which means if you look at the dividends here, the last dividend was paid, or the X day is what you want to look for. You want to own the stock on the X day. 8/1/2022, that means you would be entitled to September's dividend most likely, because look at when these X days are, the 1st and the 2nd. So then you get called away even if it's above 57. You get the premium and you still get the dividend deposited into your account on the payment day as long as you own by the X day here. So that's spreading out the expiration to September. You get a good amount of premium for this, $6,800 on top of that $8,000 dividend. So you can do the math on that, and it comes up to about $14,000 or $15,000, which is pretty cool to think about. So you can kind of get that dual cash flow. You get the 10% dividend yield roughly on top of additional premiums from covered calls. And that's what I love about this strategy. It can be used to supplement dividend income against your portfolio. But let me know what you guys think in the comments down below. I would love to hear your thoughts. And until next time, I will see you guys in the next video. And if you have any questions or anything, just let me know down below, and hope you guys have a good one. Take care.